Morning Market Commentary English, Transitions and Signposting. Welcome. In this micro lesson, you'll learn how to deliver a sharp, confident morning call that busy professionals actually want to hear. The aim is to summarize markets fast and clearly, cutting noise and highlighting what matters now. You'll guide listeners with signposts so they can follow your logic without effort. And you'll sound confident, neutral, and concise. No hype, no jargon for its own sake, just clean insights supported by data. By the end, you'll have phrases and structures you can use tomorrow morning to inform, not overwhelm, and to lead the conversation with credibility. Start strong and set expectations. A clean opener like, "Good morning, here's what's moving markets," signals value immediately. Then give a 3-point roadmap. First, next. Finally, for example, first, equities, next, rates. Finally, key catalysts. Add a timestamp and context to anchor your comments. As of 8:30 a.m., futures are steady, the dollar is softer, and oil is higher. This trifecta, hook, roadmap, timestamp, frames your call, keeps you organized, and tells listeners exactly where you're headed and what's current. Smooth transitions keep momentum and prevent confusion. Use clear pivots like turning to equities when shifting from headlines to data. Sequence your points with first, second, lastly, so listeners know where they are in the flow. When layering extra color, add additionally for supportive detail, or in parallel to show simultaneous moves. In parallel, credit spreads narrowed. These signposts act like verbal road markers. Your audience never gets lost, and your narrative feels deliberate rather than improvised. Listeners want to know the why behind the move. State causes with due to or driven by. Yields rose, driven by stronger payrolls. Then name outcomes with as a result or this led to. As a result, growth stocks underperformed. When causality isn't firm, stay credible with hedged links. Likely because suggests that. For example, the rebound is likely because positioning was stretched. Price action suggests that dip buying remains active. These phrases make your reasoning explicit while keeping your confidence calibrated to the evidence. Markets rarely move in one direction. Signal tension with however, or by contrast, inflation eased. However, services remain sticky. For mixed messages, use on the one hand, on the other. On the one hand, earnings beat. On the other, guidance was soft. When visibility is low, protect credibility with "it remains unclear" and "we're watching." It remains unclear how long supply tightness lasts. We're watching inventory data and freight rates. These cues show balance, manage expectations, and prevent overconfident calls. Convert numbers into meaning your audience can act on. Bridge with "this implies." Core inflation slowed. This implies limited pressure for an immediate hike. Add time horizons to frame risk. Near term versus medium term. Example, near term, volatility may persist. Medium term, easing financial conditions support risk assets. Finish with an actionable wrap. For today, watch Treasury auctions, WTI around 85, and tech leadership. Turning raw data into prioritized takeaways is what makes your call memorable and useful. Use templates to stay crisp under time pressure. Agenda. Today we'll cover A, B, C. Example, equities, rates, and catalysts. Flow. Starting with, moving to, wrapping up with, keeps your structure visible. Example, starting with earnings, moving to policy, wrapping up with levels. Close. In summary, key risks, watch levels. Example. In summary, sentiment is improving. Key risks are inflation and geopolitics. Watch 10-year yields at 4.2%. Templates save cognitive load and make your delivery consistent day after day. End with clarity and direction. First, summarize in one sentence. Risk tone is cautiously positive as earnings beat and yields stabilize. Next, flag key risks and next data. Risks, sticky services inflation. Next, PMI at 10 o'clock. Finally, invite follow-up to keep engagement high. We'll update after the release. This close reinforces your main message, shows you're tracking catalysts, and keeps the conversation open. Short, confident, and actionable. That's how you leave your audience ready for the trading day.